Welcome back to the channel. Today, we are settling one of the biggest questions in investing. Where should you put your long-term capital? Gold, stocks, or property? Each of these asset classes represents a fundamental pillar of wealth, but they perform wildly differently over time, carry unique risks, and serve distinct purposes in a portfolio. Gold offers stability and protection. Stocks offer growth and liquidity. Property offers cash flow and leverage. By the end of this video, you will understand the strengths and weaknesses of all three and know which one is right for your goals. Let us start with stocks, specifically broad market indices like the S&P 500. This is the engine of wealth generation. The primary advantage of owning stocks is compounding growth. When you buy a share of a company, you are buying a piece of its future profits. That company generates revenue, reinvests profits, innovates, and grows its earnings. This is called productive asset ownership. Stocks do not just sit there, they work. Historically, the United States stock market has generated an average return of around 10% per year over the long run, and that is before adjusting for inflation. Stocks are incredibly easy to buy and sell instantly. That is a massive advantage when you need access to your capital. Also, you can start investing with $5 right now. There are no large transaction costs like down payments or closing fees. The trade-off is volatility. Stocks have steep, often scary, short-term drops. That is the price you pay for the highest long-term growth potential. Next, we move to gold. Gold is often called the ultimate store of value, the ultimate form of money. Gold is an unproductive asset. It is a shiny rock. It does not generate earnings, it does not pay dividends, and it does not house tenants. Gold is primarily an inflation hedge and a fear asset. Its value increases when fiat currencies lose purchasing power or when there is geopolitical instability. When the world is panicking, gold often shines. Over the last 50 years, gold's real return has been closer to 2 to 3% per year. It lags far behind stocks because it does not benefit from compounding or productive growth. It simply preserves value. Gold often moves in the opposite direction of stocks. When stocks crash, gold often holds steady or rises. This is why it is excellent for diversification and risk reduction. The trade-off is gold is an anchor. It will protect your wealth during a storm, but it will significantly slow your portfolio's long-term growth. Our final pillar is property, specifically residential rental property. This is a business, not just an investment, and it is entirely different from the first two. Property provides two massive advantages unavailable to gold or simple stock ownership: leverage and cash flow. You put 20% down, but you control 100% of the asset. The value appreciation of the property is based on the full value, not just your down payment. This ability to use borrowed money to amplify returns is incredibly powerful. If you rent the property out, it generates monthly income. This is essentially a monthly dividend that can grow with inflation. The barrier to entry is high due to down payments and closing costs. Property is also notoriously illiquid. Selling a house takes months, not seconds. Furthermore, property is an active investment requiring work, dealing with maintenance, tenants, and taxes. So, which one is right for you? It depends entirely on your goals. For a young investor with decades until retirement, a heavy allocation to stocks is the logical choice due to its high growth potential. As you approach retirement, or if you are focused on preserving capital, adding 10% to 20% in gold provides crucial portfolio protection. If you have the time, capital, and patience to manage a business, property can be a fantastic way to build generational wealth through leverage and passive income. The best answer is likely all three, balanced according to your risk tolerance and time horizon. Thank you for watching. If you found this comparison helpful, please like the video and subscribe to the channel.